What's going on, everybody? Welcome to another Nomad Hedge market update video. So in today's video, we're going to recap the week and see where the markets could be headed next week. And so if we take a look at the S&P 500 here, we can see that we had a big, large red candle, but we seem to have found support here. And what's interesting is that it sort of like coincides with this 20 MA. And if we take a look at the S&P here on a monthly chart, we're still defending this 5 EMA. So any break below this 5 EMA is gonna take us down to the 200, or I would say not immediately to the 200-day moving average, but it's a possibility that we can fall down to this 200-day moving average because we're now trading below this 50-day as well. I think we're due for a bounce here, and the markets are heavily oversold. We did have a very strong green candle here right at this 1.272 projection level. We're nearing this 100% fib retracement of wave 4 of small degree. And if we take a look at some of the indicators, especially here on the daily chart, we can see we're heavily oversold, and the MACD has found a bottom here on the daily as well, and we can see here that the money flow indicator as well as the ADS starts to tick up. So I would not be surprised to see the market bounce here. We do have some target levels here that we could reach. I would briefly take a look at this previous open gap here. We also have this bigger open gap here that we could finally close, and then once we've done that, we would then see the market continue its descent. You know, that's typically what happens when you test the 5 EMA, that you're getting a bounce and then you're breaking below it. Okay, so we can see here that we have defended the 5 EMA here a couple of times, and when you see the market so much overextended, you are due for a bounce either way. So this is a healthy, normal decline we're seeing here. I mean, from a larger context, I mean, if you're looking at this and say, okay, well, this could be possibly part of wave E here, and then if we draw some other projection levels, maybe the end of wave C, and we obviously have these smaller degrees here pointing to an end of this rising wedge. So the markets could actually decline much further if we're not getting some strong support levels on the way down. Okay, but for now, I just like to think of things very short term here, so I'm not going to try to project where the market's going to be a month or 2 months from now. But for now, we can see that this is a healthy correction here, and if we're not finding support, well, then we'll just have to see how far the markets could be heading down. So if we take a look at the NDX, we can see that Nasdaq also found a strong green candle here, and this coincided here with this anchored weave up from wave 2, and so this has also been a level that I've been watching here, this dotted channel here. So I thought this perhaps would be a level where we would find some short-term support, and we also have an open gap right here which is due for being closed. So I do see the markets here bouncing on earliest maybe Tuesday next week or beginning of Monday. Friday was a strong green candle, and again, we do have a few open gaps here that I think we could see the NDX moving towards closing these, and then if we find some support eventually, we'll just have to wait and see. But for now, we're due for a bounce, and what I've found interesting here is we are still very stretched above this 200-day moving average. It's still rising, which is bullish, right? So if we're getting a bounce here, this is going to help the 200-day to move up further. The good news, what I'm trying to say, is that the more the 200-day rises, there's a high likely chance that we're going to find support at a much elevated level. And if we take a look at some of the indicators here, we can see here on the weekly chart that we are losing momentum. I like to look at this impulsive active. It's giving me more accurate signals, to be honest. So I'm not in that base camp that the MACD has flashed a sell signal now on the weekly. So if we're getting strong support here, eventually seeing this correction playing out, and then we could see another nested 1-2 and beginning another leg up here, then we would obviously defend this MACD buy signal here on the daily chart. But overall, this market has been driven towards the downside for two main reasons. One is that we are heavily stretched, meaning that we are very overbought, and that we have seen the dollar index and the yields rising, right? So we can see here on the DXY, which I mentioned in my previous video, by looking at this lower high trend line here, finding resistance at this level is where you would typically see the sell-off taking a breather, because we've had a steep incline here of the DXY. I wouldn't be surprised here to see the dollar index perhaps test this trend line here, or if we're done with this wave E, and we could be heading much lower here. So this is an important channel to watch. Any solid break above this channel here is obviously going to be very negative here for equities and cryptos. But if we apply some moving averages, we are above that 200-day moving average. Okay, so what's going to be interesting now is that if we find resistance here at this trend line, breaking below the 200-day moving average, and then perhaps finding support here either at the 20 or 50-day. Okay, if the 50-day holds and the 20 holds, breaking above this trend line again, you know, we could say for certain that the market is going to take much lower. The only thing that's going to save us is if this trend line here is acting as a hard resistance, and this is the end of wave E, the end of wave B here, and then we're seeing a decline here towards wave C. That could help the markets continue its ascent. Overall, the dollar index is going to tell us a lot what the markets are going to be headed here in the weeks ahead. The same thing could be said here on the 10-year. I think the 10-year has actually peaked. I mean, it looks like we've finished 5 waves up here, completed wave 5, and so if the 10-year starts to decline here, one could make the case that the dollar could decline as well. Take a look at the VIX, for instance. These are 2 levels I've been watching. Let's see if we can make it a little bit of a perspective here. Take a look at this trend line here, for instance. This is a trend line here going back to 2017, and it has acted as resistance and support a couple of times. So this is a trend line worth watching. So if we go back to the daily chart, it looks like we have found resistance here again. Either this thing is going to break apart and perhaps, you know, we could look towards closing these open gaps, or we're just going to move sideways here. And that could, you know, along with the DXY moving lower, with the 10-year moving lower, you would probably see the VIX starting to break down here quite a lot, especially if the dollar index starts to go much lower. If you take a look at the Russell 2000, I think the technicals here speak for themselves. It looks like we're probably going to build a head and shoulders pattern here. So this has been a good trade here. We have been trading the Russell 2000. We took profits here near this lower high trend line, and I mean, one could make the case that this could possibly be a bull flag or a bear flag, but this is just a neutral triangle here, so it's very all about indecision. But if this plays out to be a head and shoulders pattern here, then I think we could be going much lower, especially if you'll take a look at these open gaps, for instance. I mean, at some point we do have to close them. And here's the Dow Jones Transportation. It's a clear wedge here that we are seeing. Nothing bullish about this structure at all. I still think that we're going to rally here, maybe test this resistance level again, but we're due for a bounce here as well. The NDX also found some buyers right at this level, and this has acted as support for now. So everything is basically telling us that we're most likely going to see a bounce. And what we typically call this is a sucker rally or a sucker bounce. Okay, so you see buying stepping up. It's just part of market psychology. So this happens throughout the markets all the time. I like to also have a look at the ARK Invest here, which have seen a huge breakdown. And honestly, I just don't know how far this thing could be going. I mean, we're not seeing any support levels here. These stocks here are part of the growth environment or the growth theme, right? If we're getting a break below this 200-day moving average, I mean, take a look at these open gaps here. And we were talking about small caps earlier. I mean, these stocks are sort of like in the same theme, and any break below this 200-day means that the ARK Invest could continue much lower. So this 200-day better act as support for now, which I believe it will, considering the fact that we're going to get a bounce here. And but what happens after that is going to be very interesting in my opinion. So keep an eye on the ARK here, the major indices, the dollar. Again, if we're getting a breakdown here, expect markets to bounce from current levels. And one last thing, I want to take a look at the put call ratio here. So we've seen this level breaking above this 1.15. We've seen some support levels here for the S&P, and so when the put call ratio reaches levels like these, I mean, you're seeing the peers getting a little bit exhausted here. So this is where buyers could step in eventually. So a lot of things are lining up here with the dollar finding resistance, the put call ratio getting a little bit bearish, and we're finding some support or temporarily support for the major indices. So that was pretty much it for today's video. Expect a bounce here if the dollar finds resistance, and I'll keep you guys updated. You can follow me on Twitter, and I'll post some charts, some interesting charts if you want to follow along my trades, and you can find that on my handle Nomad Hedge on Twitter. So if you made it this far, thank you so much for watching. Don't forget to subscribe if you like the content of this video, and I'll see you guys in the next one. Take care.